Hello, everyone. My name is Mihir, and welcome to an exciting and informative session on Moonpreneur to guide you in your entrepreneurial journey. Hope you're all doing great. The Moonpreneur Board Game is a fun way to learn critical entrepreneurial skills designed for children between the ages of 8 to 15. Moonpreneur was created by Moonshot Jr. Moonshot Jr. is a Silicon Valley company that offers futuristic learning solutions to children between the ages of 10 to 17 and young entrepreneurs. What started as a plan and idea to teach futuristic skills to children and disrupt the current education system about a year ago now has a global footprint that is transforming the lives of children. Our meticulously designed four-stage patent-pending Innovator Program aims to prepare children for the future of work by imbibing an entrepreneurial mindset via product-first learning. Moonshot Jr.'s Innovator Program leverages this methodology to find the curiosity of a student, build interest, and impart knowledge. The four-stage program is designed to find the interest area of students and nurture the same while inculcating technical, soft, and entrepreneurial skills. Moonshot Jr. also offers other learning solutions like the Entrepreneurship and Leadership Development Program, Robotics Mooncamp, and Moonfunded. Now let's have a look at a video to get an insight about what Moonpreneur is all about and how it will help you develop the skills that will forever help you in your entrepreneurial journey. Before we get started, I would like to ask you, what is the first thing that comes to your mind when I say the word entrepreneur? So an entrepreneur is someone who starts and builds a business from scratch. He is someone that runs a business. Do you know of any such people in the world? So there are some of the most successful entrepreneurs of the world, and here are some of them. They have built their businesses and have made sure that it runs smoothly. Each of these people have their own business strategies, which are widely different from each other's, which shows that there are multiple ways to run a business successfully. Each of them have different processes, sell different products with different price ranges to different people using different promotion techniques at different places. And yet, each of them can be considered to be a successful entrepreneur. In this session, we will learn about insurance and risks related to product delivery. So what comes to your mind when you hear the word shipwreck? You can take a guess and think about it. I'll give you a hint. You can break the words down into simpler words. Break shipwreck into ship and wreck and try to figure it out. What both words mean individually and what they could mean once they are combined. Yes, ship is a vehicle that floats on water and wreck means something damaged. So shipwreck means that a ship gets destroyed at sea by sinking or breaking up due to various reasons, such as bad weather or hitting the rocks or icebergs and so on. So shipwreck. What does shipwreck mean? But from a business perspective, a shipwreck could mean damage caused to any transportation vehicle that is carrying your goods. So whether it's the road, air, or water, all transports are included in shipping and can be subject to shipwrecks. It could also mean damage to your goods due to fire or natural disasters or other such issues. Shipwreck leads to facing a severe monetary loss for your business. It also means that your customers don't get their products on time, which can harm your reputation and result in losing customer loyalty. So why do products get damaged, get lost in transit, or aren't delivered? Well, shipwrecks can be a significant cause of the undelivery or the delivery of damaged goods. So according to a survey conducted by Convey, a customer delivery service based in Texas, 66% of online shoppers said that delivery is a decisive factor in their shopping experience. So how do you all feel when you order something and you receive a broken product, the wrong shipment, or get the product much later than it was promised? Similarly, in the case of delayed or damaged goods. Now, 53.1% of shoppers would expect expedited shipping on a replacement product. 43.9% would find expecting a refund or discount on shipping costs, and 19.4% would expect a coupon for their next purchase. So this is going to cost huge to the business and to the company. Now, this brings us to on-time product delivery. Now, when we're talking about on-time product delivery, let's have a look. Now, the importance of delivering the right package to the right customer on time. Your customer's experience with your brand begins when they put their trust in you and your product, when they order your product. Therefore, it is crucial that you figure out your delivery systems and ensure that your product is supplied to the customer without damage and within the promised time. Customer satisfaction is the key to running any successful business, and on-time deliveries are among the most vital aspects of this experience. So I would like to imagine that once again, let's say that you order a toy or a gadget and you haven't received it on time. And this time it was your birthday and you eagerly wanted it. What would you do? How would you react? So what can happen if customers don't get their products on time? Well, your brand reputation gets affected. Your customers are dissatisfied, which means they may never purchase your product or may not even recommend you to others. It can gravely affect your future relationships with your customers, and you will lose out on repeat customers as well. You can get terrible online reviews. That in turn affects getting new customers. New customers always look out for reviews and ratings from old ones before buying. And bad ratings mean that your company is poorly received in the market, and you will have to spend additional money on customer acquisition. Increased shipping and operation costs. If customers don't receive their products on time, they are likely to ask you for a refund on their shipping costs. Besides, for you to track and reship the product means additional operational costs, such as transportation, fuel, manpower, and so on. Not to mention, if you deliver a damaged product, then that means additional pickup costs, and this, of course, is a big hit to your reputation. Now, let us hear from Amazon founder Jeff Bezos on why the back end of your business plays an important role in what it does for your brand. Now, what can you do to avoid getting a monetary hit and lose your customer base? What is risk mitigation? So what do you understand by risks? Well, this means chances of loss. And risk mitigation is when you take the required measures to protect your company or goods against potential hazards. Let us take the example of your bicycle. You go to the market and park your bicycle there. So there are chances that someone might hit it or might be that it gets stolen. Hence, these are the risks that you put a lock to ensure that you don't let that happen, to protect your bike from all these things. This is what is called mitigation. It is a way in which you reduce exposing your business to threats and suffer loss or worse, bankruptcy. Risk management is when you can identify, analyze, and mitigate risks. Risk mitigation means avoiding or reducing risks depending on the situation. In terms of product delivery, it can mean finding more secure ways of sending your goods across. But then again, you can face some unpredictable issues that can cause your products to get damaged or destroyed. In such cases, risk mitigation would be to ensure you and your business are safe from such circumstances. So now when we're talking about risk mitigation versus risk prevention happens before the risk. It minimizes the chances of occurrence of the situation in the first place. Risk mitigation, on the other hand, happens after the risk. It minimizes the chances of loss. So now let us think about the word insurance. What does it mean to be insured? Okay, so before that, let's know how it all started. There was a Lloyd's coffee house in London. So many mariners used to gather there for coffee. There used to be transportation of massive amounts of goods through ships. So there were huge chances of loss in case those ships sank or got destroyed. So they started with marine insurance to get protection against their business. So to be insured means to be protected. Insurance is to protect your business against any unforeseen damage, whether it's loss or misplacement of goods, destruction of products, or stolen items. Can you tell me the different types of insurances, if you know any? Well, there are different types of insurances. There's life insurance, where the insurance company undertakes the task of insuring the life of the policyholder. There's things like general insurance. Under general insurance comes various categories like health insurance, which is protection against the healthcare costs, fire insurance for costs against fire accidents, marine insurance is for protection against sea perils and marine accidents, and vehicle insurance for availing compensation against the damages made to your vehicle. Now, when we talk about insurance, insurance, as we know, is to protect our businesses against unforeseen damages. And it is distributing the risk among a lot of people and businesses. This is how insurance works. When a lot of people get insurance, they all have to pay a premium amount, which is a small regular payment. And the insured amount is actually the maximum payable amount in the case something goes wrong and the person needs to be paid. And the claim amount is actually the loss value. So let's imagine a car or your house or your property gets damaged due to some natural disaster and you would require a lot of money to fix it. Let's say you need hundreds and thousands of dollars in repair costs. Now, what would be simpler to you? You make all the payments for these repairs all alone, or would you like it if other people could help you out with it? Of course, you would like other people to help you out with it. Now, if someone else in the group faces the same issue, would you be willing to help them out? So would the rest of the people be willing to help them out? This is what we call risk pooling in insurance, where many members of the society come together to help each other out. So insurance companies build and regulate these risk pools and help people out when they need it. Now, while getting insurance, we pay an amount, and the premium amount is the cost that needs to be paid to the insurance company, or we can say that this is the amount that you need to add to the pool on a monthly or quarterly or annual basis. Insured amount is the maximum amount of an insurance company that it will pay for any damages. Or we can say that this is the maximum amount that you will receive from the pool in case of any accidents or unforeseen damages. The claim amount is the monetary value of the loss that you have suffered. Imagine you are shipping bulk products by sea, and an average cargo ship can carry around 25,000 tons of cargo, which means that the risk is huge due to the quantity of the risk of shipwreck. Let's assume that since insurance companies charge huge premiums due to which you have decided not to insure your shipment. Now, if your ship sinks to the bottom of the sea, can you imagine the damages you'll have to pay from your pocket? It will be a massive loss to your business, your reputation, and possibly your customer service. On the other hand, if you choose to pay the high premium and a shipwreck occurs, well, then you will be in a better position to handle the repercussions of the incident. So if your customers don't get the delivery of the goods or receive damaged products, the insurance company will cover the costs for you, and you in turn can help your customers. So it's always better to take insurance. Let's listen to the wise words of Mr. Warren Buffett as he explains the reason behind buying insurance. Moonpreneur. If you want to get real world experience on risk mitigation and insurance, you can try it out on Moonpreneur Board Game. The game gives you a real world experience of the hurdles of running a business and the risk management that comes along with it. This game will make you use your thinking abilities and become the next business leader. The game has many hurdles, Shipwreck being one of them. So you can either risk your journey without insurance to save on the premium, or you can play it safe and secure your goods. Either way, this board game will prepare you for the real world and imbibe a business mindset in you. Now, when we look at different vendors and delivery times, we have two options, Amazon and Alibaba. Now, this brings us to the other aspect of the game, which is shipment on product purchases. Each player shall receive a pouch at the start of the game. Every time a product is purchased, the product will be placed into the pouch throughout the duration of the delivery. The time of delivery depends on the purchase point, Amazon or Alibaba. You must keep in mind that longer delivery times lead to a greater chance of your landing on a shipwreck, hence increasing the risk of shipwreck. Now, Amazon and Alibaba are two different stores from where you can purchase your products, and each of them have their advantages and disadvantages. Amazon has a lower and minimum quantity with a lower delivery time, but the products cost more. Alibaba, on the other hand, has a higher minimum order quantity with a higher delivery time, and the products are way cheaper. So which one will you pick, Amazon or Alibaba? Thank you for coming to the session today. Thank you for coming to the session today. I hope you enjoyed today's Moonpreneur session. The links to a free trial for the Innovator Program are in the description below. Let your friends know, like, and subscribe.